all of a sudden volatility is coming into the precious metals, silver, gold, palladium. We're starting to see wild swings which show us things are getting a little tricky now. Is this the beginning of the consolidation that I've been talking about for weeks and was early on? We'll see. There are factors you need to know that clearly speak for it. Also, what's the number one concern that I have right now for gold and silver? And really important fact about the mining stocks, gold, silver, copper, doesn't matter. You need to know this. When we see a consolidation, this will be the reason why the mining stocks will go down hard. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so we're going to start with gold. Again, overall, still bullish. Overall, nothing has happened, as I told you before, until we break that short-term uptrend. Everything is okay. But we are seeing the volatility is picking up. And for the first time on Wednesday, we did not see buying after a weak opening and a weak European markets. Usually what had happened in the past weeks was, even if the European markets were weak, the Americans would just buy up the gold price. For the first time, that hasn't happened. We'll see what that means. But here is a factor that you just simply need to look at and keep in mind when we talk about the gold price and people talking about gold is going to 5,000 now and 10,000 and whatever to the moon. Look at the 50-day moving average. Sometimes life can be really simple. This purple line right here. We're not even talking about the 200 down here. Let's just do the 50. Do you see how far away we are from the 50? And now compare this to the development of gold and the 50-day moving average since the rally started in March 2024. As you can see, since the beginning, we basically with the gold price have been moving with the 50, very close to it. A couple of times we got a little bit away, came right back to it. Got a little bit away, came right back to it. Here got a little bit away, took some time, eventually we got back to the 50. Here then, we had a really big deviation away from it. That was April. What happened after April? Big consolidation phase. But even this year, not as crazy as this. But what does this tell us? This tells us the chances that we're gonna retest the 50-day moving average minimum is extremely high in gold. Now, the 50-day is moving up sharply because of the current run-up, so it's catching up to us. That's good, but where could this lead us to? Right here, this zone would then be the first target zone. So somewhere around 3,650 with the 50 going up, you would have a double support zone. But that's what we would be looking for as far as the consolidation if this downtrend breaks. That's not a lot. That's 10%. But this will have ripple effects on silver and on the mining stocks. Let's have a quick look at silver. It looks very similar when we see the distance to the 50-day and obviously the 200-day. As you can see, clear as day. Usually the silver price very close to the 50 until September and the run up in silver. Now, could this be the one time where gold and silver will never come back to the 50-day moving average? I mean, there's a first time for everything, but if it has happened in history repeatedly and all the time, I take that side of the bet rather than, well, this time for the very first time, it's going to be very different. So again, what does that mean for us? That means this is not the time to go bonanza crazy with purchases. If you're underinvested in gold and silver, wait for your chance. It's going to come. It's going to come. We don't know when it's going to come, but we can see we're close. Now, let's talk about the mining stocks because this is important. And I'm going to pull up the GDXJ real quick because there's a fact that you need to know about the mining stocks that not a lot of people are talking about. First, GDXJ, look at the distance to the 50 and the 200. Same thing as the gold price. Look at the past. I'm still scrolling, and as you can see, we always hug the 200 in the GDXJ. We're already at 2020. We're 2018. You see this, right? We're always hovering around, developing with the 50. Never really deviate from it. Whoop! Until now. Now, you tell me, you look at this. This is 6 years of data. What's going to happen? We're going to keep going up like this, deviating away from the 50-day moving average and the 200. If we see in the history, we always been around the 50 and the 200 too. Or we're going to come back to it. And coming back means consolidation. And for the mining stocks, and here comes the very important fact, this can be a lot harder than a lot of the new mining fans and mining speculators think. So here's the thing. Gold, that's an investment. The people that bought gold, it's 3,700, 3,800, even 4,000, they're not going to sell the gold. They will hold that gold. That's an investment. The gold mining stocks, that's a trade. That is very different, and that's something that we need to understand. For us fans of the commodity super cycle and the mining stocks, mining companies are an investment for if you pick the right ones. There's you can trade some of the junk even, right? Or some of the mining companies that are okay only. But the tip top, the ones that you really want in your portfolio, that's an investment that you're going to hold. But you got to remember, at this point, we are at the forefront. We're like the pioneers of the commodity super cycle. We are not, I repeat, we are not the main stock market investment group, so to speak, right? We're a small fraction that's way ahead of the trend. So the way we feel about things is very different than how the market feels about things. And for the market, especially for institutional investors that have been buying up the ETFs, and for speculative money from the retail sector that's in the mining stocks because they have been gone up and crypto hasn't really done anything and the Max 7 hasn't really done anything. For them, it's just a trade. And that means they're going to sell if the mining stocks correct. And when they correct, because they will. And that selling will become harsher and harder the deeper we go, because they don't care about the fundamentals. If the trade is finished, if it's done for whatever technical indicator they use, broken uptrend, whatever, they just sell out of them. And then they look what is the next thing? And they'll come back when they believe that the trade is back on. And that is the reason why the mining stocks can correct a lot harder than a lot of the gold bucks think, because they just think, oh yeah, we're at gold 4,000, we're at gold 3.8. The producers are printing money. True, the producers are printing money, but the explorers are not, the developers are not, and they all have doubled, tripled, quadrupled in 2025. So what's going to happen with them if we go back down to 3,600 and the uptrends get broken and the automated buying and selling programs trigger sell signals? They're just going to sell. It's a trade. Could be anything. Could be healthcare, could be energy, could be financials. It's mining stocks now. It's going to be maybe AI or quantum tomorrow. And that's important to understand. There's a trade component in here that can easily pull the mining stocks down 20%, and then when we go down the risks curve down to the younger stage developers and the explorers, 30%, easy. Even 40%, absolutely possible after the run up that we had. That's what we need to keep in mind. So be aware of that. I've told you before, might not be a bad time to take some money off the table, take some profits. You don't have to sell the whole position, just, sell a little bit of it, and then you can always buy it back later when you get it cheaper. That's it for today. We'll talk later. Have a great day. Bye-bye.